Hey Kyle, how you doing tonight? This is Ryan with TrendLizard.com. Thanks for sending me your email with the three different tickers. Chesapeake Energy is the first one. This is the chart. We're just going to dive straight into it. The first thing that I wanted to take a look at is you can see the yellow line chart that's overlaid Chesapeake Energy's price chart. That is USO, and that's the oil ETF that we track, USO. So that shows you that they follow pretty closely together. As far as Chesapeake Energy is concerned, it was incepted back at the start of 1993, had a really nice rise from 1999 up into the 2008 high. I think it went from about 62 cents up to about $65. Obviously, things have changed pretty significantly since then, and it's tanked since 2009 up until earlier into 2016. So if we get rid of the USO gold track there, you can see this is what we're looking at. It looks like that advance off the 1999 low into the 2008 high was a really nice trendy move, which was a good sign at the time. Obviously, things have changed, and from there it has tanked. So the tank job looks like a counter trend move overall, at least so far. It's a big three-wave decline. And in 2016, prices really tried to make a recovery from there. So there's a decent chance that this is an important low, but it's just nothing we can guarantee at this point. Fairly similar to USO. We see a ton of potential to the upside, but clearly there's still work to do. So on a long-term time frame, again, the last long-term up leg was trendy. And so far, this pullback, as massive as it's been, looks like a counter trend move. So let's zoom in a little bit. This looks at the decline off the 2008 high. It had a 5-wave or a trendy down leg in 2008, and then just went into a sideways funk for looks like almost 6 full years before breaking down again in 2014 and really falling to pieces here. So obviously things have been much better in 2016, but the significance of that has yet to be determined, and we'll take a closer look in a moment. So one thing to take note of is it does look like the down leg that began in 2014 and ended in 2016 is over, regardless of anything else. And if if this was just a counter trend recovery that was just retracing this down leg, it would point us up into this yellow area here. So it gives us an idea that there's still a ton of potential for CHK to head higher. Which is a good sign. We always want potential on our side. So that's a good sign that it still has a lot of room to move higher, even if it was just giving us some kind of counter trend recovery here. But let's zoom in again. Here's a look at the advance off the 2016 low. We can find a way to label this as a trendy move. It's not the cleanest move in the world, but there are things that we can watch that'll kind of guide us and keep us in the right side of the market here. So again, it can be trendy, could go either way, but here's what's most important. CHK needs to stay above 3. If it were to continue down and go below 3, I would say that's a really bearish sign, and I would not want to be anywhere near this stock as far as trading it. The other problem that I have with this guy is that it's actually quite a bit weaker than USO right now. USO has continued to go up while this guy has pulled back, but nevertheless, it still looks constructive. If you're interested in buying CHK, what I would do is I would look for some strength to emerge here. It takes a move above 6 to confirm that a larger advance is playing out. So if it can get above 6, that's going to be a really bullish thing. But you don't have to wait that long. Obviously, that's a far ways away. Probably don't want to wait that long. I just want to see some kind of strength here that has some real push behind it before I would consider buying this. I mean, you don't want to buy into something that's gone from, $750 down to $375. It's basically been lopped in half over the course of the last month. That's not a buying opportunity until it reverses up. I don't mind buying on weakness, but you got to see some kind of reversal to say, hey, this isn't the new trend. You want to see some kind of strength take hold here before you buy. Again, a move above 6 is a really bullish thing. Says, hey, a larger advance is forming off of February's low. A move below 3. All bets are off. It looks bearish. I wouldn't touch it. So that's my advice. I would wait for some kind of strength and look to buy it there. So I hope that's helpful, Kyle. I will get to your next ETF in just a moment.